Hey traders, John Howell here, your number one market trader. Let's have a look at the market. What's going on with gold? Why is gold dropping? It's not supposed to be dropping. What's going on? Anyway, let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into it. Traders, make sure you grab that free trading course, link in the description. To make sure you get that free trading course. I've been getting a lot of emails of people losing money. So in that free trading course, again, it's free. In the free trading course, the very first video is about a 30-minute video long. That is going to walk you through the top 13 mistakes you're making right now and how to overcome them. Okay, so if you are losing money, please just go get that video, at least the very first video in the other. It's 5 phases in the trading course. That's phase number 1. Okay, so let's look what happened with the actual stock market today. So let me clarify a few things. A few videos I've actually done over the last few days. I'm saying that on the Dow Jones, we're probably going to make our way back down towards the bottom through here somewhere. Okay. But that's where I overall see this market going through. But one thing I've actually said, and this is something that I really wanted to focus on, is that one thing I've actually said in the past is that that it's really important to understand that when the market gets too far away from the moving average, it means that we're oversold. Okay? And what happens when we're oversold? We either do two things, don't we? We go sideways so the moving average can catch up and then we get to go for another run again. Or either we go for a pullback and then we go for another run again, okay? So my overall analysis this here is that even if we do get a bit more downside like this, we're so oversold from the moving average that there's a high probability that it's not going to be a big drop. Now, it can be a big drop, right, in the markets. But looking at what we're looking at here right now, there's a high probability that I don't see a big drop coming now, right now. I could be wrong. What I do see coming is possibly a bit more of a sideways movement or a pullback, a bit of a resting phase first, get the moving average coming down, and then we start the overall movement on the downside. The end of the story, that 18th chapter that you read of the book is what? Lower. How it does that, I do not know. Okay, so I hope that clears it up for some people in the actual chat box below. So again, when we're too far away from the moving average, and the thing is that guys, you have to look at the reality of the situation. Okay, is that if you look back in the past, look what happens when we get too far away from the moving average. What happens? We always come back to it. Okay, it's just how the markets work. It's not like, oh, well, John, this doesn't work. That's what sort of bullshit gimmick you're telling us right now. It's like trading is all about probability, and we need to use that probability on our side to do better in the markets. Now, talking about doing better in the markets, what's going on with gold? Why is gold dropping for? So I did a few videos in the past couple of days, and I said, I said, oh, what's going on here? Every time the moving average is strong down and we get a pullback to it, we end up getting a drop. The market pulls back to a strong moving average. We end up getting a pullback and we get a drop. The market gets a pullback, got a strong moving average trending down, and then we get a drop, right? So looking at this level through here and looking at that there, you can see the reason why we had a drop. Why? Because the trend is still down and the market is dropping right now. So, but the really interesting thing is this, okay? Check this out with gold. It's not the moving average or the trend. Otherwise, well, the trend is down, yes. Okay, trend is down, lower highs all the way down, strong moving average, strong like bull. That's what I was saying. Get ready for another drop in gold because of all the technical reasons why. Oh, John, technical schmecknicals. We trade fundamentals. Oh, really? Technical schmecknicals, right? It's really interesting. People come to me, and I'm a technical analyst, right? That's who I am. And then they say, John, why do you look at charts for? You cannot trade fundamentals. You cannot trade fundamentals. Oh, John, yes, I can because, you back in 2009 and back in 2020, and and the Fed did this and millions have been made, right? You're on the backdoor step there, okay? Trading is all about pattern recognition. That's the art of trading. Investing is where are we in the picture, the big picture, where are we going, what's likely to happen, and so on and so forth, right? We continue moving forward. So as an example, the big picture for an investor would be right now would be what? Bearish. Why? They're raising interest rates, they're combating inflation, there's a lot of pressure on the actual stock market, so there's probably going to be a lot more pressure over the next, say, 12 months or 12 months or 2 years on the stock market because of the pressure on that. Now we're going to get our pullbacks, our whipsaws and all that sort of stuff, right? But overall we're down. And then we might start to get a bit of a change in tune, and then we might get a bit of a bounce and so on and so forth, right? So that's an investing mentality. If you are a trader, trading is all about trading patterns, not a YouTube video, right? Not me saying, oh my goodness, gold's getting ready to drop. You don't trade that, okay? No, not if you want to be professional like this, but if it's just a bit of a side gig for you and you want to have a bit of fun, then yeah, that's what it's all about, okay? But check this out with gold. Check this out. So if I bring up my little trend line right here, check this out. This is something really interesting. This is something really, really interesting. Now, look at the past here. We had a lot of support here, didn't we? A lot of support. And then we had a lot of support, and we had a lot of support through here. Right? A lot of support. So look what happened. The market actually broke up above this support level. Now, that should have actually been now support. But look what happened today. We actually broke back below it. Because we broke back below it, that's a very bearish sign in the markets. Now, unless we do something like this and we hold and we turn around, unless we do that, I have a target of 1350 in gold. Unless we start to hold here right now and start to get back above, right? Get back above this high, which is around these highs through here. If we do something like that, yeah, we're creating that bottoming pattern. But unless we do that, if we keep doing something like this and we start to come back down towards the lows, guess what? I have a target of 1350 in the market. And you know what that means? It simply means don't fight the markets, right? Do not fight the markets. And something I've been talking about with the good old crypto market as well too. What have I been saying? I've been saying that we are getting ready for another dump in cryptocurrency land, right? The good old crypto. And look what's happening. We've been coming down ever since. Bit of a pullback and we'll be coming down, down, down. We are getting ready for another thump on the downside with the crypto market. Same for Ethereum. Same for Neo, right? This is Neo here. And we got Cardano as well too. Cardano has actually broken to a new low already as well too. So we're starting to get that breaking down. We've got the good old Dogecoin happening as well too. So we're getting a lot of pressure, right? A lot of pressure on the downside, and we're getting ready for a lot more movement on the downside when it comes to the overall markets. Now, I'm going to flip to a bit of a big picture here analysis. Big picture analysis, looking at these markets, and once again, I've gone back to the Nasdaq chart now because I want to share something with you once again. Yes, we are breaking through here, and if we do get a bit more downside, if we get a bit more follow through downside out of this here, it's probably not going to be big. What's probably going to happen is we might get a little bit of we're probably going to get that, and then a bit of reversal, and then maybe a bit more time, wait for the moving average to come up, and then we go down. This is not a bottom, right? This is just a bit of a fast breakout rally, and then probably a drop. Because once we break this here, I have a target of 7,000 on the good old Nasdaq. That's right. Give me a Nasdaq in the actual comment section below, because that's where we're probably headed in the market. So there we go, traders. Hope you enjoyed this little update through here. Take a few little pointers from here, but rule number one is always trend analysis. But make sure that when you're trading the market, you're trading based off patterns that you like to trade and that you're confident in trading, and not off me, a little bumblebee who's doing this little entertaining little video for you. Do not be trading off us YouTubers. No, that is the wrong thing to do. Do not trade off a YouTube video. It doesn't matter how excited I get. Doesn't matter how I say, how much conviction I say of this. That is the wrong way to trade these markets. You trade based off patterns that form in the markets that you are personally comfortable with. You do not trade based off a bumblebee, myself, doing YouTube videos. Now, I'm not a bumblebee with my trading, right? But if you are taking trades based off a YouTube video, that is the fastest way to blowing up your account.